All right, let's try this again. For some reason, this YouTube wasn't streaming. I don't know why she swallowed a fly. That doesn't make any sense to me. So let's see if it works now. No? Duplicate stream key. What the heck? Are we live now over there? I don't know. It was giving me all kinds of errors. Huh. Good. Now I can't see the chat. Now the chat's blank. Gee whiz. Oh my goodness. Oh, it's so funny. Yeah, so I put the disclaimer here. I just want to see the lag. Okay, good. So, anyways, we're here. Good. We're good with that. All right. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. I missed you. How you been? Yeah, so funny. So many challenges, right? So I've been building TRADARS 2.0, and then that's been an interesting journey. And then right before launch, AWS crashed and took everybody in the world offline and wrecked a bunch of things. So then I had to deal with that. And then our hosting company went down, and all of a sudden we had IP address errors, and and you don't know what's happening until it's happened. So I spent all night working on TRADARS 2.0 and couldn't get it to work, and then got 3 hours sleep, woke up and found out it was AWS went offline and it wasn't even us to begin with. That kind of stuff. And then, like I said, then the IP address errors and all this kind of stuff. Like, just if it can go wrong, it definitely went wrong. But, anyways, yeah, now I can see the chat, Brian. Yeah. Yeah, so anyway, so if this YouTube thing, I'd already streamed, and it turned out you couldn't tell, and then I streamed again, you couldn't tell. Then I refreshed and streamed again, and anyway, so everything's, if it can't go wrong, it has gone wrong. But anyways, I'm full of love and joy. It's really good to see you. And lots of really good, amazing things are happening. But today is not really launch day. It's, get back to work day. And so we have FOMC tomorrow. Do you guys want to do a live event tomorrow? Do you want to do FOMC live? Does that sound like a good idea? Yeah, I hope so. I think that'd be a fun thing to do. So, anyways, we have Tradars, we have Traders Way, we have you. Everything is right as rain. Let's do some Forex. Da, da, da. Yeah, cool. So we can do some technical analysis. We can do some fundamental analysis. We got a lot going on in the world. Not only is it FOMC tomorrow, but there's a lot of earnings. Yeah, lots of earnings. And then Trump is out in Asia, as you know. And so maybe something will happen, right? Something will happen. Something good. at least the end of hostilities, but no real resolution or solution. Hey, that's something. Less bad is good, right? Yeah, and turns out she's a man. Yeah. She's a man eater. Yeah. So anyways, looks like we got the base of Traders 2.0 working. I built a lot of wonderful infrastructure. Um, we have 3 layers of security now, and that's why it's been glitchy the last couple of days trying to get you guys in, because there's so many layers of security. But that's a good thing in the long run, and it's worth fighting for in the beginning. Well, I've been here, Sebastian, just working my butt off, but I don't think I've slept more than 5 hours in any given day in the last 3 weeks, but usually more like 4 hours or less. So no fun and games for me. But it's because I'm passionate about what I'm building for us. It's really cool. So we're going to use. We're going to look at TRADARS, but I imagine there's lots of things broken. We're not broken, but I haven't had the time since the last 2 or 3 weeks. I've been working on the security aspect. I haven't gone back to look at our data, because the data is being pulled from all the central banks around the world. Plus, we got to get price from price feeds. And I haven't had a chance to go back and double verify. They used to work, and it's not necessarily true that all of it's, pulling as it should be. So there might be some glitches in there. There's probably some access level glitches that I need to iron out. But all that kind of stuff, that's the easy stuff. That we can iron out those wrinkles in a day or two. So that'll be interesting. And then the one kind of other thing on top of that, even though there's still wrinkles to iron out, and then there's some other things that I need to kind of not create, but there are some things that we're used to that are not here at the moment, but I'm in 3/4 of the way through building it. So I think over the next couple of months, you'll see, new release of features. But Traders 2.0 is so amazing that we're using much more sophisticated analytics, and we can do so many more things than we ever possibly could. So now it's just like, okay, we got this massive foundation, and we can build whatever we want now, which is quite extraordinary. But a lot of TRADARS, I think you'll feel are familiar, right? Like this looks pretty familiar. It's not the same, in fact, but it'll look familiar, and that's by design. And then some things are just so radically different. You'll get a sense like, ooh, yeah, like, ooh, that's different. Well, it's because all the stuff behind the scenes is built from scratch on top of AI. So, yeah. Yeah, Richard, you probably can get in now as of the last hour. Yes. But yeah, everyone has, Richard. Everyone for the last 3 weeks. Yeah. All right, cool. But for most people should be fine. All that kind of stuff. But anyways, let's just get going. We got things to do. I want to look at the charts and all that kind of stuff, right? Hola. Yeah. All right, so we'll take a look at the market radar. And these are kind of some of the things that I was saying that I need to double and triple check that this data is accurate, but you'll get this idea. Like, for example, oh my God, there's snow there's no COT data. Well, there should be COT data. Oh, and of course, the other thing going on with this, Ryan says, "Oh, is the extra security necessary for the API connections?" No, no, it's mostly for our security needs. You know, your, um, I mean, just I don't know. Like, how about this? Let's just put it this way, because nothing was insecure before, right? So I don't want to make a big stink out of it, but I had an opportunity to build enterprise software from scratch, and so the question is, would you like robust security, moderate security, or no security? I'm like, dude, let's just build robust security. Why? I don't know. It sounds like the right thing to do. Right, Brian? Like, so it's a pain in the butt in the beginning here to get it all synchronized because there's 3 layers of the security. But now I know from now for the next 10, 15, 20 years, we have like epically awesome, amazing security. Why? I don't know. It seemed like the right thing to do. All right. So, anyways, we should be pulling the COT. But okay, remember I said everything that has gone could go wrong has gone wrong. Like AWS went down and caused a bunch of problems. My ISP provider went down, and so we had DNS errors and IP address errors, and once again, I think it's me, and it turns out it's not us, it's not TRADARS, it's somebody else's issue, and you're like, but you waste days or even hours and days, and then you find out, wait, AWS is down, and I was up till like 3:30 in the morning trying to get things to work, and it turns out AWS is down. Oh my God. Like, so it's been one of those things, but the government being shut down too is really an interesting thing, right? Because as soon as I decide to rebuild an architecture that interacts with the U.S. government on many different U.S. government agencies, suddenly that reporting feature that has worked reliably for years suddenly doesn't work because they've turned it off. So is it working? I don't know. I don't know. We might be pulling data that doesn't exist. So there's going to be some wrinkles, but it's not. I'll tell you, it's not us per se, right? But anyways, so like loading risk trend, I don't want to get into it, but clearly I have a much more sophisticated methodology for this now. I don't know if these prices are right or if they're old because I haven't been able to verify our price feed, but the price feed was working. I need to go back and verify that the price feed is working. We have very, very, very good COT data now. We used to have great COT data. We have phenomenal, to kind of go with kind of a Trump theme. Phenomenal. It's the best. It's beautiful. COT data that does much more sophisticated analysis than we had before. Maybe that will be working on a different page. What this is trying to do is load the YouTube video, which so now I need to go back and check the YouTube API, which also needs certain permissions from the Google Workspace API, and it's clunky. So I'll get that working. This is the easy stuff, right? Yeah, because literally just an hour ago, it looks like the security system is up and running as needed. So anyways, we'll get to that. This is very familiar. You guys like this, right? You're like, dude, that looks exactly the same. Good. Good. Volatility looks exactly the same, right? Yeah, good. That's good. Good. That's how it should be. Now, this is where things get interesting because the fundamental side is crazy different. And there's stuff here that's probably not going to work, or we're going to get blocked when we shouldn't be blocked. So be prepared for that. Like that. Like, oh my God, why is the color changed? Oh my God. It's not supposed to be black like that. But whatever. Dude, working with AI is a eye opener. So this is what you have to deal with when working with AI. So somewhere along the line, AI decided to turn this page black. I hope the rest of the pages are not black. But you just find out. No, yeah, you just find out AI did it without permission, without asking. It just did it, and you're like, "But I locked this page." Oh, you're right. I'm so sorry. So, anyways, why is this black? Well, it's not going to be black later today. I'll have this fixed. And of course, this ain't working right. So I'll get that fixed. Okay. But here's how this has been designed. And it should work. But you can just click on these tabs and it'll dynamically update these charts for you. So it's easier to do this analysis. Is that right, Jim? Yeah, and I see a lot of interesting things that are not working here. So in the next day or two, you're going to love it. But do you notice how it analyzes and just tells you what this means? Isn't that nice? So it's just telling you strong, bullish, or bearish. Now, also in the old iteration of TRADARS, we would just show you the number of bulls and the number of bears. What we're doing here is significantly different. For example, we're calculating the difference between bulls and bears. Okay? So it's not that there's 50.5% bulls on gold and 49.5 bears. No, it's if you add up all the bulls and then subtract all the bears, there's 50% more bulls. That's why that's very significant, because that's why I wanted to put that there to make sure you understood what these numbers were. You're like, oh, it's just ever slightly bullish. No, that's extremely bullish. And the colors and the weekly flows versus the positions all on these little cards. But here, this is supposed to launch deep analysis, and I notice, like when you click here, it's supposed to launch the analysis, but maybe now this is working. Let's take a look. No. So one of the things that I wanted, now remember, I'm building this for you, but I'm also selfish. I'm an only child. So I'm building this for me. So one of the cool things is I go through all this. I'm like, what do I want? What do I need to be a better trader? What do I need to be more informed? So one of the things that was working in the last iteration before is that when you clicked this card or you clicked this bar, it pulls up multi-year history of gold net positioning in the COT report. And then if you have access to Aiden analyzes that and then tells you where we've been, where we are, and where we're likely to go. So one of the things that TRADARS does now that it didn't do before is it uses artificial intelligence to look at our data sets, and not just one data set, many data sets, analyzes the data set as an economist, as an investor, and then gives you the output. So, for example, if it was predicting where gold was going to be in the future based on, let's say, the history of COT, so it's going to look back, let's say, a couple of years in the COT and try to predict the next 6 months, would that be helpful? Oh, yeah. But it wouldn't be complete, would it? The reason for it is it would only be looking at COT data, but it's not looking at the price trend. It's not looking at monetary policy. It's not looking at seasonality. It's not looking at the charts. But what if it could? Well, what I'm telling you is it can. It does now. So it's real disappointment. That's why this isn't an official launch. I just wanted to get a stream going here. But so like tomorrow, for example, when you click on this card, it's going to give you 4 or 5 layers of analysis, multi-dimensional analysis, and then put it in an output like you just asked me. Hey, Wayne, what do you think about gold? Well, in the real world, my answer would be, well, if you look at the charts, if you look at COT, if you considered seasonality, did you see those pivot points? Yeah, it does all of that. Oh, well, we've just hit a pivot profit zone and we're in a seasonal peak zone, and based on historic analysis of seasonality, the next 3 weeks is a turning point. So thinking about all of this, there's vulnerability in the bullish position. Now you see that, like that's crazy, right? Like it sees the pivot points and it doesn't just see like seasonality. One of the mistakes that I saw you guys make when you log into the seasonality section is that it shows like August down and September up. And so you're like, well, that means down and that means up. Well, that's not necessarily true, because what you want to look for is inside of that, where of the down and the up, where does the trough start, and when do we go from no longer falling to no longer rising? TRADARS 2.0 does that and says, well, this is typically a down month, but around the second and third week, you start to see it trough out and start turning actually bullish into a bullish September. You see, it's thinking backwards currently, actually concurrently, because it's thinking now plus on 4 or 5 different dimensions, and then looking at our historical analysis of the near future. So it can go back 20 years, but then give you an outlook for the next 6 weeks. Like, dude, why? Because that's what I wanted. And so we built this together. Yeah. Oh, I'm telling you. Oh, yeah. I'm telling you. And it's here. It's here. Just unfortunately, when I click the button, it doesn't work. Don't worry. It'll work tomorrow. So we'll take a look at some other things. Wow. See, I've been on the back end of this site for so long that I haven't even seen this for a while. I've never seen this not work, which is actually kind of interesting. Why is this not working? Here we go. All right. So, you see these dotted lines? Okay, GDP only has one GDP. All right, with retail sales, check this out. You see this? That's like 15 years of retail sales data. And you know what that dotted line is? Our projection for the future. Yeah. Looks like it hasn't updated. So I have to update all the databases again. Oh, is that right, Jim? Jobs? It shouldn't take that long. Yeah, I don't know why it's taking that long, or at least why is it taking that long for me, but I'll get to it. Yeah. But what do you guys think about this? Like, just think about retail sales, because we're trying to analyze the true health of the U.S. economy, right? So there are many, 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 many components. Did we have retail sales analysis in TRADARS 1.0? No, we had none. So now we're tapping in to directly to the government agency that produces this report. We have 15 years of monthly data, but we're also calculating over the last 12 months the implied high and low inside the data set. And unfortunately, this needs to be fixed. Okay? So it's trying to give you a prediction of where the next retail sales number is. So you can see it's glitching there. But check this out. Retail sales, the measure of total sales of retail goods, a key indicator of consumer spending, which is part of GDP. Check this out. Rising trend up 0.5% point, right? It's a rising trend recently. So it's even. Now, that seems simple, right? Now, think about it back when you had algorithms. You would have to write something that said, look at the database, understand that it's been up lately, but then you have to define what lately means, over what time period. And then if it's greater than this number, then you say it's rising. If it's less than 1, it's falling, right? If it's greater than 0, it's rising. If it's less than 0, it's falling, right? And you have to like calculate this, but there's no thinking. It's just sort of if then, if then. So if it's greater than 0, say the word rising. No. This is Aiden actually telling you what's happened or what is happening. And then this is Aiden, our AI, our projection for the future. So we expect, now remember, this is multi-dimensional. So this is not the trend in retail sales. This is the trend in the United States economy applied to the historic trend of retail sales. Dude, like you're asking an economist, well, what do you think retail sales is going to be like in the future? Well, based on everything I know, not based on this data set, based on everything we know. Yeah. So we get an implied low. It shouldn't be less than 4.1, shouldn't be higher than 5.5, which shows a lot of volatility. And then when I get this working, it'll actually give you a projection for the next retail sales, which would likely be less than 4.8. Probably not 4.1, so I might say 4.3. And now that wouldn't be a guess, that would be quantitative. But the fact that we're tied directly into the database going back 15 years, and we're making projections, not linear projections, non-linear projections based on multi-dimensional economic and even technical analysis. So TRADARS 1.0 calculated the statistical trend, right? Remember Y over MX plus B? So I could say, well, statistically, it's more bullish than bearish. TRADARS 2.0 does that too, and it looks at chart patterns, and it looks at pivot points, and it looks at moving averages, and it looks at MACD, and it looks at all of that on multiple time frames, and then applies that towards fundamentals as well. So you see, like, it's significantly, extraordinarily next level. So we can do this for industrial production, capacity utilization, because these are things that go into calculating GDP, and we want to know what GDP is down to the nth degree so that we can make more informed investing decisions, right? So durable goods orders, inventories. So remember, all of this goes part of like ISM. Isn't that cool? Dude, like, this is crazy, right? Yeah. Well, what's going on? Well, Aiden says it's a declining trend. It's down 0.2. Declining trend, down 11 percentage points recently with a projection of continuing down. Isn't this amazing? Where here's our non-linear projection for durable goods. So now think about it like, is the economy speeding up or slowing down? Well, according to durable goods, it looks like it's slowing down. In business inventories, industrial production is expected to kind of stabilize and then flatten around 1.0. Isn't that cool? So now we're breaking down manufacturing and all that kind of stuff. Yeah, like, dude, you haven't even seen the crazy stuff that I have in development. Like, this isn't AI yet. The AI part is the projections, right? So here's your CPI. Okay, you can see it's a little choppier, but we have our implied volatility in the numbers, our projections, all that kind of stuff. We have CPI headline and core so that you can see the impact of oil and food prices. Again, rising inflation trend, stable inflation trend. So you can see that this is slightly old because I don't think this is updated. So that's what I'll be working on today. But if you go back, let's say a month ago, we were concerned about inflation not cooling off. We have found recently that it probably is cooling off. But looking at this, even when you take out food and energy back then, which is, again, only a few weeks ago, this is showing the concern is up for inflation. We do PCE and core PCE. We do PPI and core PPI. Dude, does this make you happy? I don't know if I can emphasize how happy this makes me that we have all this data. You're like, you're kidding me. And look, a summary of what it means. Look at export prices, the 10-year break-even rate, the market's expectation for average inflation over the next 10 years. Dude, what? What? This is where we expect inflation to be over the long period. Dude, look at our export prices. Why? Because all of this is important to understand. Is the Fed going to raise or cut interest rates? Is GDP going up or down? Should the dollar strengthen or weaken? We're breaking this down. Now, don't worry. You might say, oh my God, this is overkill. Wayne, you got so much data now. I don't know how to interpret it. That's what Aiden does. Aiden already understands this. So, like, I created this page for you to see it and to play with it. And maybe it brings you some confidence, right? Because you're like, oh, I know all this stuff. But I built it actually for Aiden. This goes into Aiden's neural network. So if you think if Aiden is thinking about, let's say, 20 variables, both technically and fundamentally, and calculating that into seasonality and what that means for monetary policy, and then doing comparative analysis between the United States and Europe, and then it has to think about those 20 variables. It's pretty close to a neural network. I think what it's doing is so complicated, right? So you get overwhelmed, let's say, because I'm giving you all this data, but this is what Aiden is saying. Aiden, our AI, and Aiden is saying that, and remembers it. So then when you say to Aiden, should I buy gold? It will actually think about it. And not like ChatGPT BS. No, no, no. I taught it economics and technical analysis, the way I think about it. So Aiden is me. I taught Aiden my pivot point strategies and theories, my economic theories. So it's not like it went to the internet and just gathered generic psychobabble on economics. I taught it economics. And now it is called Aiden because he helps you, Aiden, he's aiding you, but AI, you get it? It's clever. Hey, hope this works. We never did this before, but hey, do you want to analyze the 2-year, the 5-year, the 10-year, the 30-year? Look at it. Heavily short, expecting yields to rise. Okay. And actually, it's supposed to be doing a lot more than this. Interesting. Okay. Well, I'll get this fixed for you. So, one of the things it's supposed to be doing is a full yield curve analysis. Yeah. I'm not sure what it's doing here. It's not supposed to be doing that. It's supposed to be doing this, but this risk context is not supposed to be there, which is interesting, but it's part of something else that I'm doing. So for some reason, it pulled something from a different part of the site and then popped it in here, which it's not supposed to be doing. It's supposed to be doing yield curve analysis. So this is COT. Okay, this is COT data. So now we have COT data for the 2-year, the 5-year, the 10-year, the 30-year, but we also have the 1 month, the 3 month, and the 1 year. We might even have another one in there because I want to see not just is money going into treasuries. Well, the 10-year T-note is the most prominent of them all. But what if they're going into the 1 year instead of the 10-year? Well, then it tells you what people's futures expectation for inflation or for rates is going to be. And so not only do I want to know, is the market buying treasuries or is the market buying 10-year T-note? We're calculating the shape of the yield curve. Aiden is thinking about what this means. Is it steepening? Is it flattening? Is it inverting? And puts it into the analysis. So it's much more than just reporting the COT positioning and the COT flow. We're taking all of this, calculating the yield curve, and then thinking about the meaning of the yield curve. So now we're things like the 210 spread. What does that mean? Okay. You guys loving this? This is going to be very pretty. Probably by tomorrow, I should be able to get all this fixed because this is the easy stuff. I've been working on the hard stuff forever, but I already made all of this and it already worked. So now it's just basically pulling the data and updating it. I mean, isn't it overwhelming? You're like, wait, you're not just pulling COT data on the 10-year. You're pulling all this data for the entire yield curve and then thinking about what the shape of the yield curve means to investing? Based on institutional bond positioning, equity stance, and safe haven demand. So see what it's thinking about here? So again, I don't think I asked it to do it. This is incomplete, but it's doing something like what I've asked it to do. So I said, okay, imagine you know all the COT data for the entire yield curve of the U.S. Treasury market. obviously safe haven flows, but are they going into the short term or the long term? And that's where you get the shape, right? And is that greed or is that fear? What does it mean? Is money going into the S&P 500? Is it going into gold? Is it going into dollar? Right? If it's going into the dollar, it's probably risk off. If it's going into the S&P, it's probably risk on, all that kind of stuff. And we're looking at positioning and change of positioning. So if you were to look at all of this, what's the yen doing? What's the euro doing? What's the dollar doing? What's gold doing? What's the S&P 500 doing compared to the treasury market and the shape? So is money going into the treasury market and or out? And is it steepening or flattening the yield curve? And taking all those questions and the flow of capital into these risk assets in total, what can we learn by the actual investment and trading activity of institutional investors? And when this was calculated, it was slightly bullish. Dude, like that's crazy, isn't it? So we went from a situation where it was data dump, right? Hey, look, there's retail sales. Data dump. Right? Look, there's retail sales going back 10 years. Great. It's just a data dump, isn't it? Here's a bunch of data. Good luck. You're like, wait, I just want to know what should I be doing? Yeah. So that's where this whole other level of adding a thought process is what we've done. So the overall assessment is slightly bullish. Cool, right? Now, seasonality, again, I don't know why this page is black, but so I'll get that fixed. But this is our seasonality, and it's crazy more sophisticated than we had before. What? Again, this isn't supposed to be black or dark blue or whatever this is. But check this out. So it looks like it hasn't updated. So I have to update all the data. Don't worry about it. Don't worry about it. I'll get this fixed today. But I want you to like pay attention to a few things here. Don't look at the pretty colors. I mean, they're important, but don't look at the pretty colors. I think what the most important thing is, okay, transitioning from September to October, historical patterns suggest a positive shift. See, so September is a down month, but the month-to-month outlook is it'll go from bearish to bullish. It tells you this. So this would have been back in September. To say, hey, September's down, but guess what? There's a positive shift in the month of September. So it's looking at the past, but it's trying to predict the future. So imagine, so this is a screenshot back in September. You know what this blue line is? The projection for the S&P 500 for the rest of the year, this year. And so what did we say? From the 28th of September, the stock market would go up. So you tell me, since, let's say, October 1st to today, was the stock market generally up, generally down, or generally sideways? I can tell you my retirement account is way up. Yeah. So that was our projection from the time that this data was frozen, right? Because it hasn't updated. And this is probably due to the government shutdown as well as the work I've been doing on the back end. So again, I can get this updated. But it was saying basically from October 1st, our analysis shows definitely the stock market's going up. Now, these other things that we're looking at, like what's this gray area? The gray area is the range, like the standard deviation, right? The red line is what the S&P 500 actually has done. So you can see this is way outside the norm, okay? And all that kind of stuff. So September was the current month at this time. Average return, negative 1.97. On average, September is a down month. Okay? 50% of the time it loses money. And it's got some vol. So not only is it likely to fall, the vol suggests it falls quickly. But October is a positive month 67% of the time. Remember, we're going back decades of analysis. Decades. And we're getting this from our candlestick data. It's not like you subscribe to a service to say, tell me all this information. I'd like to give it to my clients. No. This is actually data stored in our database. And then we go back and do our calculations. This is ours. This is proprietary. Every single bit of code is proprietary. It's ours. So we calculated the volatility of every October going back decades, the win rate of October, and the average amount, which means sometimes it could be a lot more than 2, because 1/3 of the time it doesn't go up, it goes down. So then let's say if we did a different calculation to say, well, of the 67% of the time it's up, how much is it actually up? That might be 5. Okay? But here's the thing. That's where this last thing comes. If you look at September, which it thinks it is, it's a bad month. If you look at October, it's a good month. So it's analyzing and saying that there's a positive change from the dip, which is this shown in the standard deviation, range, the gray zone. Somewhere in here, we shift from down to up. Isn't that cool? It's all dynamic. Isn't that cool? Okay. And so we can do this monthly, and we can do it annually now. Okay, let me just describe this. Best 3 months to trade the S&P 500, May to July. Worst 3 months, February to April. Strongest month, November. Weakest month, September. Most reliable month, November. Best buy the dip month, January. Whoa, what? You can plan your year in advance. So look we have all the historical data, right, to show you how we got these calculations. Dude, do you understand? I've been doing this for you at 3:00 in the morning. I'm playing around with our data set and our AI, and I'm like, hey, can you tell me this? Hey, Aiden, can you tell me that? Hey, Aiden, can we structure it this way? Hey, Aiden, you see it? So now, like, you can go to the month. So I think it thinks it's September, right? What's the best thing to be trading this month? You should look at Bitcoin. You should look at gold. You should look at WTI going up, euro dollar going down, historical average return. Dude, so now you can, like, what should you be doing in November? We're not far from November. Do you know what you should be doing? Well, Aiden is already thinking about October ending and November starting. So we're already analyzing all of that. But then you can also look at the month and say, look at this, don't look at that based on the norms. Oh, it's full working. I just have to pull the data because I've been doing security stuff for weeks and weeks and weeks. But Ravio, this isn't like a demo. No, this stuff works. September pattern analysis, 5-year average return, historical win rate. Here's the summary. Analysis confidence. Confidence based on 6-year sample size and 50% win rate. Moderate confidence. Right? Pattern shows some variability, but generally leans in one direction. Now, check this out. Are you listening? Typical monthly timing patterns. Early September often sees follow through from the previous month or initial positioning for the new month's themes. Mid-month, a typical period of heightened volatility as key economic data for the month is released. Late September, you can see trend completion. Remember, it's down. So somewhere between the 21st and 30th, remember, September, our basic seasonality says September's a bad month, negative 2%, right? Late in the month, between the 21st and the 30th, you can see the downtrend completion, some consolidation, and early positioning ahead of next month. So the historical data shows the S&P 500 typically recovers in October after September weakness with an average improvement of 4%. Okay? Yeah. So I've gone too long, but this feels familiar, right? Yeah, it is. Training. Sad Mac. Okay. I'll fix that. Now, Aiden, I think this is locked and it shouldn't be. Okay, so I'll get this fixed. So this is where Aiden's brain lives. So I'll get this working today as well. And you'll be able to ask it things like, or ask Aiden, should I buy gold? And Aiden will check the daily pivots, the moving averages, the COT positioning, what the US dollar is doing. Okay. It'll check the risk in the marketplace. Yes, Lucas. Yes. Okay. Now, the next iteration after this is that you can ask Aiden, like, so how about this? Currently, you'll ask Aiden, and Aiden will consider all these things, right? Daily pivots, moving averages, COT positioning, what is the dollar doing? What's our risk assessment for the market? So it'll look at like the yield curve and all that, like I showed you, and a bunch of other things like VIX and all that, and seasonality. And it'll give you a well written answer. Okay. What I want to do next, because that's good AI, but it's not the most, it's not the future, it's the current, right? Like that's really good. It'll write a report for you. What I will build shortly will be for you to have a full conversation with Aiden. And Aiden will ask you questions as you converse with Aiden. Aiden will pick your brain and you'll ask Aiden questions, and together you'll develop the strategy that you seek. That's like crazy. Yeah. Well, hopefully by the end of the year, this Aiden will be like your friend. You'll get very comfortable talking to Aiden about developing your trade strategies. It'd just be like you and I having a conversation. I'm like, well, what's your opinion on euro dollar? Are you a bull or a bear? Why? Well, how do you feel about the ECB? How do you feel about European GDP? Why do you feel that way? How does that compare to your thought for GDP in the United States? You imagine like having a conversation like that, and then you and Aiden put together like, okay, well, based on all of that, it's not what Aiden thinks, it's what you think. Aiden will challenge you and say, well, have you thought about the risk? Have you thought about the fact that it's a bearish trend and you want to be a bull? Have you looked at the annual pivot point? Do you understand you're at a key turning point? Yes, Lucas. Yes, yes. Yes. It's not an aggregate. Yeah. Yeah. Aiden works for you. So in an algorithm, you would just enter all these things. So if you think the uh, the U.S. economy is expanding, then you think the dollar will be weak. You think that kind of stuff. No, yeah, you. So Lucas, you bring up a good point. You and Aiden will, yeah, learn together. Yeah, that should be possible. Yeah. At the very least, Lucas, if that is not possible, and it may not be, it may be a limitation in the large language model, but the next best thing to that, Lucas, is it knows the way I trade. How about that? So it's again, it's not just some like I integrated ChatGPT. Um, it's our own large language model. So at the very least, Lucas, it'd be like you and I having a conversation. It'd be how I trade, which may be similar or different from the way you trade, but you would get a second opinion. That for sure. Okay. So, anyways, that's too bad. This is logged. Okay. Here's another thing, and I hope this works when I click on it. How many people here used tradeplans.ai? Where I would essentially, I taught AI to analyze a chart and give you a feedback on what I would do if I were me. Because, of course, it wasn't me. Did anybody here actually use it? It was pretty cool. Richard, it is a game changer. I 100% believe this. 100%. This is revolutionary. Anybody use Aiden when it was TradePlans.ai? Okay. No. TradePlans.ai, you would submit your trade plans, what you thought about euro dollar, and then Aiden would email you a report on what Aiden thinks about the euro dollar. Okay? Okay? Yeah. So check this out. Where's my mouse? We have something now called Grade My Trade, and of course it's blocking you and it's not doing that right even. All right, so I'll work on this today. All right, so let me just tell you what it does. In the old version, the first version of Aiden in TradePlans.ai, you would upload base so you had a history of your trades. So it created a trade journal. But you had to tell it, okay, this is Aussie dollar 4-hour chart, and I'm bullish. Right? So the reason you had to do that part is it didn't know what you were trading. It didn't know a time frame. It didn't know if you were bullish or bearish because it can't actually see. So you would just say, all right, this is a euro dollar 4-hour chart and I'm bullish. And then we would go into the candlestick data, create our own charts, and then report back what would Wayne do in a situation like this, right? Aiden in TRADARS 2.0 actually has eyeballs. Doesn't that freak you out? Okay, he doesn't actually have eyeballs. I should be literal here. But now you upload your chart image, it can see and read the image. So I don't need to ask you what currency pair is it? What time frame is it? If it's on the chart, it'll see it and say, "Oh, cool. You're on Aussie dollar, looks like a 4-hour chart." Well, if you look at the MACD and if you look at pivot points, well, you might not have MACD and pivot points on your chart. It doesn't need to see them because Aiden can calculate them in his mind. So he'll look at your chart and say, and see it and be able to analyze your chart, but Aiden has his own chart too and can then do comparative analysis and give you the thought and then give it a validation score. Oh, wait, what? So it'll look at your chart and say, here's what I think about your trade plan technically. Here's what I think about your trade plan based on fundamental analysis. And based on technical and fundamental analysis, give you a confidence score. You see? So like you're a bull, but the market might be bearish and it might say, okay, technically your chart looks fine, but fundamentally your trade plan is stupid. Okay? So that's what this is about. Okay, Karnak says there's like too much going on here. Well, this is the whole point of where TRADARS is going. And I made this comment earlier. So let me I'll just end it here, but let me wrap it up with this underlying thought. This data that we have displayed here. So let me do this one. Okay. This data that we have displayed is just for your convenience and for your confidence and for your own personal thought process and analysis. Okay, we all like the pretty colors. But Aiden looks at industrial production and says, oh, it's stable. Aiden looks at capacity utilization and says, right, it's stable. Looks at durable goods, it's declining. Business inventory is declining. And puts that into his neural network and thinks about it, truly. And thinks about, well, how does this impact monetary policy? How does this likely impact the value of the dollar? How does this, do I see that impact in the commodities report? Are we seeing this in flows? And is this with or against seasonal normality? And so the whole point, okay, Karnak, is that as we move towards newer iterations of TRADARS, like 2.0 and then TRADARS 3.0, it becomes more and more of you working with a trading partner that has decades of trading experience, a master's degree in economics from an Ivy League school, and works for you, and you can talk to him 24 hours a day, 7 days a week. And Aiden, being your assistant, helps you create your logical and intelligent trading strategies based on all of this, like market sentiment, fundamental analysis, technical analysis. Okay. Probably going to log me in automatically. Okay. Sure. So you can, it's a freemium model. You get real value for free. You get our Squawk Box for free. That usually costs $100 a month. Market Radar, the news feed. You get basic economic analysis. No, Adam, you're already in. If you have an active, so you were probably blocked last night because for some reason my database expanded to 4.5 million subscribers, which isn't actually true. So something went wrong. So I had to destroy the whole database and rebuild it this morning. I finally got it done. But yeah, so you have access now. Yeah. Even if it didn't work 2 hours ago, you do now. But you can start for free and get real value, I'm telling you. Yeah. Yeah, you can upgrade into anything you want. So like for example, if you don't need my daily psychobabble, you don't need to pay for that. It could just be you and Aiden, $150 a month. You'll have every ounce of data we produce, and I have some cool stuff. I think I told you this a year and a half, maybe 2 years ago, but I've actually started something. Let me give you a tidbit of something that I've started. Aiden goes out into the world and gets the transcript from every Fed speaker. So presidents of the Federal Reserve, as well as members of the Board of Governors. Okay? So if Mary Daly from the San Francisco Fed does a speech, either a proper Fed speech or maybe at an economics club, Aiden's going to is going to read the speech and think about the speech. What did she say? Does she say she's neutral? Does she say she wants interest rates to go up? Does she say she wants to cut interest rates? What did she say? And what has she been saying over the last 6 months to a year? And how has what she said changed? Then we create a database of all the FOMC members, voting and non-voting, so all the Board of Governors and their speeches, and all the Fed presidents and their speeches. We create a database of these people and their opinions and their change in opinions as the data changes, right? Their opinions are going to change. And then create an aggregate score for the entire FOMC so that we know subjectively the sentiment of the FOMC and their likeliness and willingness to change monetary policy and in what direction. And I've already started building this. And we can put that into our analysis of, is the Fed going to cut? Not just CPI. Oh, CPI 3.0. I guess they could cut now. Another thing I'm working on is the Fed funds futures market. We're going to have that inside of TRADARS 2.0 as well. That's right, Lucas. Creating our own dot plot. That's precisely, well, it's not precise in the sense that we can get their 1 year, 3 year, 5 year projection of interest rates and the neutral rate or something. But their opinion and their changing opinion on monetary policy. So sort of. But the thing is, a dot plot is a dot plot. It's a dot. Dot doesn't tell you what they think or how they feel. What I want to build is on the sentiment side of how does Mary Daly feel? Where does she lean? Which is a lot more informative than a dot. And how has her opinion changed over the last 3 or 4 weeks, 3 or 4 months? Yeah. And so now then you imagine that we probably have some scoring mechanism and some sort of gauge where, there was a 70% chance and now there's a 73% chance the Fed's going to cut. Meanwhile, and this is where I get to the Fed fund futures market, bankers are looking at the dot plot, looking at the economic data, and they're guessing at what the Fed's going to do. And now we can compare and contrast the institutional guesswork of what the Fed is thinking and our sentimental analysis of what the Fed is thinking, and then compare the two. Yes, Sebastian, it's in the live section. Do you guys see like how cray-cray we can make this? How about an entire energy complex analysis page? How about a gold analysis page where we're tracking the flows of gold into and out of central banks, the productivity of gold miners. Right? Imagine if we had a complete supply and demand apparatus for gold, including historical norms, historical trends. And, we could look at the inflation globally and all that kind of stuff. Like, can you imagine the cool stuff? How about real estate? You think real estate is important to the economy? Does it show if things are bullish or bearish? Are people buying? Are they investing? Are they selling? Are they getting decent prices? Are builders building new buildings? Are they asking for permits to build new buildings? Right? So, a permit to build a building. Are they building buildings? Are the new buildings selling? And are the old buildings selling? And at what price? And at what interest rate? And that could lead you to buy Home Depot stock, don't buy Home Depot stock. So we have Case-Shiller. Shouldn't we track Case-Shiller? Oh my God. You're like, Wayne, that could be a whole thing. I've already started. Tell me I'm doing the right thing. Tell me I'm on the right path. Tell me that this is amazing. Come on, I'm an only child. This is where you shower me with love and you say, Wayne, that's the greatest thing ever. You've worked so hard and it's so good. Come on. I need it. Yeah. Oh, and I should bring that up. And again, I think almost everything is going to work absolutely perfect for tomorrow. So tomorrow I'll do my morning live stream. I don't want to do the one this afternoon. I need a break. I need to sit down and play some video games and go to bed before midnight tonight. How about that? So no 4 o'clock. But tomorrow I'll do a 7 a.m. Then I'll do a YouTube live stream. And then we will do the FOMC tomorrow. Does that sound good? And I believe if I work my butt off today, everything at TRADARS. Okay? Everything at TRADARS should be working. JGB is like, I hope I can log in. Yeah, I think you can now. A couple of hours ago, you would not be able to. I know because I deleted the entire database. So now it's super, super, super clean. So you should have no problems. You don't have to pay more money. You don't have to resubscribe. It's all been handled. Yeah. Okay. So it's all been handled. And then we'll do our thing tomorrow. The FOMC is what I'm thinking about. Does that sound like a plan that everybody? Yeah. And feel free for those that are not paid subscribers. Almost everybody here is a paid subscriber to TRADARS. Some of you are still quant boxers, which is fine. You can log in. Yeah, your quant box stuff works at TRADARS. I'd like you to move over, but it's not necessary at the same time. So I don't know. Stay where you are. I'll probably take down the QuantBox site. Maybe I already have. I don't even know. But you'll get 10 times better value just logging in here. So I just moved you over, right? So, anyways, start with a free account. But if you already have an account, go ahead and log in. Right? Invalid email address. That's funny. Well, you should be able to start here. Start here. It's going to ask you a few questions like, what do you like to trade? Because I want to know what to build next. So it'll ask you, are you interested in real estate? Are you interested in crypto? You know, that kind of stuff. It builds a little profile. It's not intrusive. It asks you how important is AI? How important is live training? You know, and then you're in. That's it. Free. And if you want more, right, you can upgrade. It's a freemium. Pretty cool. So I got a whole bunch of work to do then to get this up and running for tomorrow. So I should bid you adieu. Thank you so much for your patience with me. Right? Thank you for your patience with me. And you've been frustrated at times. I get that. Me too. Yeah, it's been a tough road, but I'm telling you, um, this is good. Like, oh, oh my God, what we're doing together with TRADARS 2.0 and beyond is really, really astounding. I'm telling you, what we're doing is ridiculous. And you've seen just the most basics. And I've given you a few other hints of what's going on, but um, we have extraordinary work together to do together in the next, let's say, 18 to 24 months. And what'll happen is it'll become more and more and more and more AI for you. So it's not a data dump. I don't want TRADARS just to be, hey, look, we got 2,000 different charts for you to look at. Nobody cares. Now, it's nice to be able to go through and see the logic behind the thinking. But at the end of the day, I want you to ask Aiden or ask me. And that one of us will always be there for you to help you make your own informed investment decisions and not relying on some idiot YouTube guru. Instead, you have an Ivy League economist with decades of trading experience and decades of economic data and intelligence that far surpasses the average CPI. The logic is far superior to that when you're thinking about the sentiment of how the Fed feels about interest rates, not just that CPI is 3.0, right? Like, wow. And that you can have every day a conversation with Aiden, and you can have a conversation with me, and together you're able to build a logical, intelligent trading and investing strategy for you. It's just astounding. And it works. So I will see you tomorrow morning. Who's going to be there at 7 a.m.? Who's going to be at traders.com tomorrow at 7 a.m.? It's been a while. I know you've been logging in every day and I'm not there. So now you're like, well, why should I log in? And you're probably not going to even be there. I've been logging in every day, but you're not even going to be there. No, I'm going to be there. Yeah, don't hold a grudge. We're on the same team. And for everybody that's not subscribing, yeah, you check it out. Start with the free. Go with a freebie, man. Yeah, Brian, every day. And Brian, like, I watched your video on Friday, and I'm like, holy smokes, Brian got in and did a video. And then I'm like, oh, so did Pegler on Thursday. I'm like, oh my God. Yeah. So you guys are amazing. I love working with you guys. Thank you for everything that you do, in particular for the patience that you've uh, provided graciously to me. So we'll get on with it. Have a great day. I'll see you tomorrow morning. Cheers.